Your seats. We'll be starting in 1 minute. All right, everyone, I'm going to introduce the next speaker. So Wolf Call is a leading expert on blockchain applications in broad arrays of industries, from initial coin offerings and smart contracting, as well as private investment fund regulation and compliance. His scholarship constitutes over 85% of empirical and theoretical scholarship on blockchain applications and corporate governance and private investment fund regulation in the United States. Additionally, Wolf is the leading proponent of dynamic regulatory solutions for innovation. He advises crypto companies, crypto startups, venture capital funds, and international policymakers on blockchain-based solutions in fintech and legal tech. And as an advisor, Call focuses on creating synergies to his clients and building successful new crypto businesses among others on existing solutions. He speaks regularly at many conferences, and very lucky to have him. Wolf?
Thank you, appreciate it. Can everybody hear me? Okay. So thanks, Corey, for the invitation, for setting this up. I really think it's important, I just communicated that we stop talking in silos, so bringing different folks in from different industries is much more beneficial than just going to crypto conferences where the blind talk to the others. Sorry, nobody. Okay, so I represent Samata Labs, and we are mostly academics, just to give us a little bit of background on this. We are academics currently in Japan, the United States, and Europe. And so Samata Labs is the commercial arm of Samata Research Institute. So what Samata Research Institute does is it develops new protocols for decentralized commerce based on the assumption that reputation verification systems in autonomous, decentralized, and anonymous systems, I know that's a word mouthful, are needed for the crypto evolution. Yeah, so this is all, it's a new perspective on the crypto space, and it's all academics. Yeah, so we're all professors, finance, economics, computer science, mostly UC Davis and Berkeley at this point. I myself, I'm a trained economist, but I teach law here in downtown Minneapolis. And with that, let me jump into what I want to talk about. I want to talk a little bit about where we've come from and how internet-based platform enterprises dominate. I think most of you know this, but I think it's sort of a good precursor to get everybody on the same page. And I'll also be a little bit provocative with some of this, so we can chat about it. And then I want to talk about showstoppers, internet infrastructure. Many of you will know that MIT is now working, and several sort of leading internet founders are now working on this idea of using new protocols, new ideas to get to a decentralized web, right? So how do we, why are these folks doing that, right? Why are we getting to the point where people are saying we reached the end of scaling on the internet, right? And then the question becomes, is it only new technological solutions, new protocols, new TCP IPs, or is there something else we need for decentralized commerce, right? And we believe in the something else. We can talk about what that may or may not be. Yeah. And so let me start out with this. I believe we're all cattle. We're all held as cattle. Why? Why are we cattle? What do you mean? Okay, let's narrow this down a little bit. The way we are dealing with data, the way we're interacting on the internet, in my opinion, we're cattle. Somebody take issue with this, please. Nobody? Yes, please do.
I've actually had this conversation, and my blog writer wrote a blog post about it, that it's primarily the fact that we are no longer individuals when it comes to the website, only in the sense of we are another piece of data. Therefore, we are the ones being sought, bought, and sold through a lot of the internet and its data processes, because the more information we feed into the system, the more they have to pull from us, buy, sell, and use for their purposes.
Who's there?
Any of the bigger companies, for example, let's throw out Cambridge Analytica. They're the ones that wanted to, pull in all that data from all of the users that you interact with and all of their data so that they could make assumptions for their business decisions, as well as some of the other companies, Facebook, Google, Apple, any of those industries that their main purpose in the business that they do is not necessarily a social network and social interaction providing you search results, but gaining your data and your information in order to further their business.
How?
Mostly by offering you platforms where you can provide that data and they can ask questions and they can track what you're searching for.
Why?
Who's doing this presentation?
Hey, I'm a law professor. I can't help myself. I call on people, okay? Apologize. Okay. So why are they doing this to us? And why aren't we taking issue with it? Why are we willingly accepting that they're treating us with our data like cattle, hurting us? Why? Convenience. Convenience. We've been trained to release our data and to not expect anything in return. The way this works, everybody does it, not thinking that you're actually releasing something that's valuable, that is yours, that should give you rights, revenue, whatever you want to call it. We have been trained to think, it's the convenience that makes us release the data. And so the internet-based platform companies, the top ones, they've arguably, I don't want to do it. So they're using our perception to further their own businesses. Why? Because our data is our data. They're using it, however, in order to get access for convenience. Yeah? Because consumers expect convenience, and we're trading convenience for the rights that we have in our data. We don't think that we should have control over our data before we enter a platform-based business. Use Google services, interact on social media with Facebook and so forth. We don't think that way. Nobody really does. I mean, some veterans may think that way and get very angry if you talk to them and motivate them to talk about it. But most of us don't. We just simply accept it, but this is how it's done. If you want access, you surrender your rights to your data. They're treating us like cattle. And I think that will change. It has to change. In my opinion, crypto can help that. I'm actually moving away from the word crypto. Emerging technology is probably the better term right now. Okay, but here's what it is, literally. Yeah? So we are being drained like cattle. And why do users need to understand data supply chain? So this is going back in a different angle to what Eric was talking about, right? Just as you want to know what's in your food or what you put in your head, and I understand their limitations, right? Because we can't go all the way back to what we're engaging with intellectually, right? But it's the same with data. It really is. It's the same. It's knowing what your data is in many ways, and when you release your data, is in many ways similar to what you put in your body. Now, some may say, well, it's so dimensional comparison, but we can talk about this, right? So when I teach this, we spend a whole hour, 2 hours just on this issue, right? What's the comparison and is it true? Of course, we don't have time for this here. So let me move on. Where are we coming from? Well, the internet evolved over time, obviously, right? So 69, arguably, we're starting with Unix, email developed, email client, and then, of course, most important, TCP/IP. Yeah? And we'll talk a little bit more about how that works. Usenet virtual communities start in '84. DNS, first internet-based malicious attacks, World Wide Web, proposal afterwards, AOL is launched, first web page, MP3s, government starts using it. Hooray, finally, yeah? Okay, and we are seeing similar things happening right now with decentralized technologies. The reason I'm showing you this is because where we're coming from with the internet, we're seeing the whole thing play itself out again with, sorry, this is getting very loud right now, playing itself out again in decentralized technology. Yeah? But there are very strong similarities. TCP/IP is a decentralized technology. I'll talk about it in a little second. And the roots of the internet, if you think about the cyberpunk movement, right, in the 70s and so forth, there was a very strong movement to maintain internet integrity, internet decentralization, internet avoidance of choke points and avoidance of control, right? The whole movement was motivated by that. And we lost it. How did we lose it? Content management, right? Somebody had to get users onboarded, and it was easier and cheaper to do that in a centralized way than in a decentralized way, the way the internet was born. Yeah? And we didn't have decentralized technology the way we have it today since 2009, Satoshi Nakamoto. Yeah? Okay, so the atomic bomb, if you want, the real evolution is TCP/IP. Yeah? And of course DNS, but I want to focus here on TCP/IP. So if we just look at what it does, right? So the protocol breaks data into packets, and packets travel from router to router over the internet according to IP protocol, right? So, but we already have worldwide existing routers. So if any of you have seen blockchain comparisons, right? The nodes around the world that contain records, fractional records of the entire blockchain. It's a similar concept. Yeah? So you chop it up, you release it through routers, you put it back together. That's how it works. Yeah? That's what the protocol does. So in many ways, that's already a form of a decentralized approach, except that you put the whole thing back together at the end on the other side. Yeah? So similar for DNS, I don't want to go through it. But that creates points of control. The way we've done it traditionally is it needed to consolidate around a few curated services platforms in order to become practical for everyday people to use, right? So, and because of that need, the onboarding problem, right? How do you get people to use it? You can only get people to use it if it's practical, if it provides content in a way that people want to actually engage with. And we have the same problem today in crypto. Sorry, I used a bad word again. In the emerging technology, decentralized technology, where people are just fighting to become the next big protocol, right? So we're looking at EOS, Neo, Cardano, Ethereum. All these are attempts to be that next thing, where people find it easy to engage with, and are engaging with the technology in a user-friendly way. We're nowhere near that. I don't know how many people are using SCADA and MetaMask and all these other systems. They're not user-friendly. You can't give this to your grandmother and say, hey, this works, just click here, right? No way. There's all kinds of stuff that you need to know to input, to engage with the technology, right? So we're nowhere near. What are other problems? What do we know? What are other problems in crypto? Scaling, tell me. Has anybody figured this out? Are we close to 300,000 transactions per second? We're not even anywhere near it. Neo claims 10,000 transactions per second with optimization. Delegated proof of stake, EOS claims 50,000 with optimization. I haven't seen those results anywhere. Credit claims even more. So there are different chains that are trying to solve this third generation problem, right? So first generation was Bitcoin, second generation was Ethereum, smart contracting. Third generation is trying to fix the scaling problem. Nobody has fixed it. Now we're messing around with proof of stake algorithms, but nobody is really there yet, right? And we have always ignored the governance problem. EOS is right now crumbling. They're the fastest the fastest in the world, most prominent, $4.2 billion ICO. They can't even get to the next stage because they haven't figured out governance. They're crumbling. They're destroying themselves right now. Yeah, so nobody has really figured that out. We think we're third generation, and the media, the people in the industry, they've tried to drum this up to make more money, right? But we're nowhere near there. Nowhere near. Yeah, so again, Symata takes a little bit of an outsider's perspective on this. But okay, let me talk a little bit about cost benefit of internet centralization. Yeah, so how do we get to this? How do we get to this point? So in order to provide the content, and to onboard consumers, what happened is, over time, 2 internet-based companies are controlling this. And this was the question that the friendly lady and I discussed earlier. Hello. Why are they doing it? Well, it's ad revenue. 85% of all internet-based ad revenue, 2 companies. 2 companies. Talk about choke points. And we all willingly accept that. The game is rigged in their favor. And everybody accepts it because we've been habituated in many ways. We accept it. We don't think about it. Because we have a collective action problem. We can't all as consumers get enough consensus to decide that we're no longer putting up with it. Now, there are other attempts. Brave is a new browser. There are all kinds of, but they never get market traction enough to really compete. And Google knows that. Okay, so centralization perks come with a cost. We might gain in terms of convenience and efficiency. We then again lose in terms of control and freedom. Decentralization is the antithesis of this. Yeah, so it's this idea of peer-to-peer community, and I don't want to use the buzzword that the decentralization folks are using. Sometimes I find myself falling back into it, and I consciously, we at Symata, we're actually prohibiting now certain words, because we don't want to be back in that bucket where everybody has sort of different associations with it, right? Okay, so choke points. So social network platforms. They are really, in many ways, what we would consider choke points. And so it all came from a different perspective. I mentioned the cyberpunk worldview in the 70s. So it started really with this recognition that this can be something different. This can be a different way of organizing things, organizing corporations, even society, some might argue. And we moved away from it for convenience and for onboarding purposes. And that's fine, you had to do that. But we're now at a point, at a critical point, where we can change that. We can change that in the future. Now, many of you will say, well, that's very idealistic. But we are now at the point where people at MIT are talking about this, where the media is picking up on it, and where we actually have a debate, a worldwide debate about a decentralized web. And the different folks, and Corey and I talked about this briefly, who look at it from different perspectives. Some say, oh, it's core protocols, it's new technology. Others are saying, no, it's just questions of how do you give the same service that everybody's used to in a decentralized way without even telling the consumer that it's different. They just have a better experience and they have more control, right? That's what this is about. So let me contrast quickly. Centralized internet-based business models. So we're coming from the PC, invention of the internet, establishment of the social media platforms. And we're somewhere here right now, at the knee of the curve. So this is the innovation curve, right? How much innovation is happening and how quickly. We have linear trends initially, up to here somewhere. And now this is all changing because of these new emerging technologies and systems, right? So we have deep learning, machine learning, big data, sensors that Eric spoke about, blockchain technology, and machine learning. And so we're somewhere here. And I want to encourage you to challenge this, but I think there is, with Moore's Law and various other perspectives on this, from my perspective, it's very difficult to argue that point, that we have exponential trends of innovation. Yeah? So if we're here, the question then becomes, where's society here and ultimately here in 20 years? And it's different. We really have to wrap our head around this. We're used to, as a society, we've always grown linear trends. This is different. This is a form of disruption in innovation that is unprecedented. I want to say, correlation is not causation. I'm not making a causal claim here. But if we contrast this with the S&P, just in terms of 61-year period, how many S&P companies, in light of this disruptive innovation trend, have disappeared? And I'm talking about brick and mortar businesses. How many companies have disappeared while we've only started this, right? We're still just here. So we have to really think about what is happening with those brick and mortar businesses if this is proliferating, yeah? So let's talk about some examples. So we have the car industry. How is the car industry competing with internet-based businesses? Absolutely, right? We're now competing with those companies. They're in the same business line. In the next 10, 20 years, it's a real question what happens with those cars. Can they fully compete? Are they trying to? Absolutely. Yeah, they have to. They know they have to. But they're competing with internet-based businesses. Same for the traditional wholesalers. That was the traditional, in America, the traditional competitive landscape. Today, it's this. Alipay and Amazon. We all know that, but if we believe that this is happening, we have to ask ourselves, if this is where we are right now in this competitive landscape, where is this going, given all of this happening? Yeah? The combined effect, the surge, if you want, of this combined technological innovation, yeah? With all the technologies that factor into it. So we have this now. Let's talk about cable providers, internet access. It's a traditional environment now, and content accesses. Now we have, of course, Netflix and YouTube. Same goes for payment systems. And I'm not even listing the decentralized payment systems that are now emerging. So, of course, we have Alipay, PayPal, and so forth. These are just the centralized ones, right? So if you think about what, there's some estimates, Credit Suisse and OECD, on the high end, they're saying 100% of finance can become decentralized, with decentralized models. Yeah, that's a 3-year-old study. But here's maybe a exemplary perspective on this. So Airbnb versus Marriott. We're looking at a 90-year-old business versus a 9-year-old business. I'm sorry, for purpose of comparison, I stopped at 2016. So we have 1.1 million rooms and listings in 110 countries versus 2 million in more than 191 countries. 90 to 9 years. 27,000 employees versus a little bit over 4,000 employees. Valuation, double. 9 years to 90 years. So if we compare a traditional brick and mortar business with, and I know you can make all kinds of arguments why it doesn't work and how the comparison is bad. I'm trying to illustrate a greater trend, right? That's what this is about. So why? Why are they able to do this in such a short time span? Why? Well, they're very asset-light businesses. Now you might say, well, we'll always have assets, right? Okay, that's true, but why are so many startups now talking about asset tokenization? Democratized access to assets. So it's one of those keywords that we try to avoid in the crypto communities, right? How do you use increments of assets and sell them as tokens online, with giving everybody access, not just a select few who have the necessary financial means to buy the whole asset, right? So tokenization of assets. So I just listed the top ones. We all know them. We read the papers. Amazon, Apple, Alphabet, Microsoft, and so forth, right? And if you just look at how asset light they are, it's really tremendous difference. At the same time, the valuations are double in 1/10 of the time period. Yeah. So I'm trying to create a bigger picture here. So why? And this is something from I teach law, from a regulatory and compliance / governance perspective. There's a huge difference. This is really something where we really have to stop and pause for a second. What are the asset-heavy businesses doing? And we've been all trained in it. We've all been trained in centralized thinking. Including myself, everybody has. The lawyers are probably the worst, if I may say that. Yeah, why? Well, because it all goes back to the courts and Congress, right? It's an extremely centralized system. So we've all been trained in it, and we all are used to this model. Brick and mortar business model, I can show you a correlation. This is how it is. Centralized top-down control. That's what we do. That's what we're used to. That's what we've grown up to get accustomed to. These companies do it differently. And they're not doing it perfectly. Please don't misunderstand what I'm saying here, right? They're always falling back into centralized top-down control mechanisms, but they're cognizant that we can't do this in the long run. This is not how our children and children's children are going to operate. It's not happening. I teach it every day. I can see it already. Every day I see that folks don't want to operate in this. And the money only pays you to put up with this so far, right? This is why Silicon Valley has been so competitive with Goldman Sachs and Wall Street. Wall Street simply couldn't fill the positions because they were losing people to Silicon Valley because the younger folks, they wanted this. They wanted flat hierarchies, best idea wins. They wanted experimentation, co-creation. Yeah, they don't want to be in a room where somebody. Okay, I don't want to get into this. But so I think there's a very strong correlation between heavy asset, top-down approaches, light asset, decentralized, internet-based businesses with a much different governance structure. And we can take this to another level. So if we look at how flat and how open a given company is, the way people interact in that company, the way decisions are being made in the company. So we can start here with the hierarchical closed companies, the typical brick and mortar businesses that we're used to. So we start here, asset-heavy, GE, Predix, and so forth. And then somewhere in the middle, we find Amazon, Apple, mixed platforms, right? And then asset-light would be typically Google, Airbnb. But the epitome, if you want, of all of this is the DAO. What is the DAO? Now, somebody heard of the DAO. Corey has heard of the DAO. Really? My head of product and PR always says to me, don't ever talk about the DAO, people don't understand. But it's so important, it's the future. It's how society will be run. What's the DAO? Decentralized autonomous organizations. Okay, so 3.5 years ago, Christoph Jentsch and several other folks said, okay, Ethereum allows smart contracting. We can actually build a company based on smart contracting. So hands please if you have lawyers in the room. Hello. Not a lawyer. People who are actually lawyers. Okay. Okay, so we're used to this, right? So if you want to do business, you either do an LLC, but really you should be doing and I teach this stuff, so I can say that and make a little fun of it, but you should really set up a Delaware corporation if you want to be taken seriously, right? We incorporate, we know where it is, we have all the precedent, we can always default on the precedent. It's brilliant. It's the best thing we've ever done. Okay, so a DAO is the antithesis of this. A DAO is an organization that has no incorporated entity. It doesn't exist in the real world. It only exists in code, in smart contracting. So the relationship between people is completely coordinated with code. There is no hierarchy. There is no, as I said, incorporation. There is no top-down control. The only control is code. The code coordinates the relationships between people. And I know I'm stretching many of you, but if you look at what's possible with this technology and where society is going, if you look at this is inevitable. This is coming. This is a little bit early. And for those of you who know the DAO, it failed miserably. Why? It failed, well, the SEC, the SEC, yeah, I know, the SEC has views on this, yeah? It failed because people the people who coded it did it on a volunteer basis. They never made any money with this. But they forgot to make sure, and just to be by way of background, so the largest crowdfunding campaign of its day, 1 month, $180 million, was invested in the DAO. What happened with those 180 million was that the code allowed, in a fully secure way, to take assets and send them to a subsidiary account that nobody could control. So in essence, they siphoned off $60 million. It was sitting in a subsidiary account, so hackers, these are hackers that attacked it. It was sitting in a subsidiary account and nobody could access that money. $60 million were gone. They still existed, but they technically were not accessible for purposes of investment. So the DAO, the original DAO, was a virtual venture capital fund where $180 million was invested by investors around the world to allocate and make decisions on tech investments through this DAO entity. What they didn't understand was that the code allowed this diversion of funding. So what they had to, there was a miserable failure, miserable. The reason why it was a miserable failure was it was commercially driven with assets that conveyed power. That was the problem. They were attacked because they were a for-profit entity. They wanted to make money doing this. So what we're doing right now, what the community is doing, is they're using code experimentation with donation DAOs to fix the problems in the original DAO. The DAO is already over 3 years old. This has already been happening. Yeah? So again, it's an entity that is completely flat hierarchy, and I can't go through all the ins and outs now because whatever, I have 10 minutes, 20 minutes?
7 minutes left.
7 minutes?
Yeah.
Oh, okay. Okay, so showstoppers, internet infrastructure. Internet infrastructure is 40 years old and due for an overhaul. And Eric mentioned some of this data. It's the same data set, Edelman report, fantastic. 33,000, I'm a big fan of big data sets, of course. 33,000 participants in 28 countries. Really fantastic data set, right? So they surveyed executive and among others on, so the question here is, do you trust in platforms, meaning platform-based internet companies, right? And the numbers are staggering. I mean, Eric mentioned some of this. It's really, really a concern. Yeah? So the trust in these internet-based businesses in platform companies is plummeting really quickly. So we have a very old infrastructure, and we have a major trust crisis on the internet. In America, it's actually one of the worst, right? At the same time, we have cyber attacks. Cisco, so Samada Labs works with Cisco a lot. They do the Rotterdam port automation, among other projects, where they need decentralized authentication protocols. And so Cisco is estimating that by 2020, there's some high estimates, I'll give you a lower, 50 billion devices will be accessible on the internet. Yeah, so IoT devices on the internet, 50 billion, low-end estimates of Cisco. So this number here, 18, if you just look at the cyber attacks, if think about what happens with these numbers, talk about exponential trends. If we put 50 billion internet devices, so the washing machines that talk to each other, the hair dryers, all this stuff, right? That's all coming. We all know it's coming. So at the same time, it's so much cheaper to attack. Yeah? So if you think about all these devices going online and the cost of attacks coming down. So there's one case that was heavily reported in the media where a gamer spent 75, you can do this for $5,000 right now, by the way. You hire the Mirai botnet for $7,500, you can inflict $3 million of damage on any company, anybody in this room. I'm not advocating this, but you could, if you spend enough time and resources, if you're really angry about something that a company did to you, oh yeah, you can bring them down. No question. Every single individual can do this. And we have obviously a lot of people in the world who have access to the internet. So the costs are coming down tremendously. The Edelman data is really, if you just look at some years, overall trust parameters are, it's really, really concerning. how much the disruption is, and not just on the internet-based platform metrics, right? And again, this is a big data set. I wouldn't be citing it otherwise, because a lot of stuff is sort of anecdotal. Pew study, just to give you, just quickly to update on this as well, asked 3 months ago, baby boomers, Generation X, and millennials, the following question: can people generally be trusted? Baby boomers said 40% yes. Generation X, 34% said yes. And you see where I'm going with this. Millennials said 19%. I'm not singling out any millennials. Sometimes people get upset, oh yeah, I don't trust people. I get this a lot, but it's true, apparent according to the Pew study. 19% of millennials. Now, people say people can generally be trusted. Now, what are their children's children saying? We don't know yet, yeah? Maybe this is coming around. But the trend is somewhat disconcerting. In America, I'm sorry, bad news, minus 37. This is unparalleled anywhere in the world. Okay. So, same thing with fake news. We all have seen the Russian botnet attacks and the Russians spending, government paying $800 to people to binge watch House of Cards on Netflix and then write content that is wrong and misleading to get Americans riled up, right? So we've all seen that, but if you look at this data set, 7 in 10 worry about false information as a weapon to be used. So talk about lacking trust on the internet. These internet-based platforms, they evolved without this data, without these concerning trends. Yeah? And you can see where I'm taking this. I believe there's a paradigm shift happening, where we're somewhere here now. We haven't even started really seeing the downward trend. And we are somewhere in disorientation, concern, confidence, morale is dropping, and we have to come out of it. We at Samata Labs, we believe that you have to fix this, to simplify it, with decentralized technologies. So we're here in the past, we are now in the present, and the future somehow has to be a networked solution. But what is that going to be? So Bitcoin showed us that it's possible. That's why Bitcoin is so important. But regardless of what you think about it, Bitcoin showed us that decentralization is economically viable, but only economically. That doesn't mean that you can build on top of that technology. Yeah? There are tremendous problems. We all know scaling doesn't work. What is it? Up to 7 transactions per second, just it's never gonna work, right? You can't build network effects on top of that, yeah? So where's it going? Where's this weird animal, Bitcoin, that really is just a store of value? Where's it taking us? Can it take us to the next level? It's a weird thing. We don't know, yeah? What are you going to do with this? Can you build on this? No. So we have other systems, right? So we have Ethereum, and I mentioned that's the second generation, yeah? So second generation, Ethereum now started to put on smart contracting as a way for people to exchange value in anonymous ways. And this is important. You don't know who the counterparty is, yet you send money based on certain metrics, and the contract protects you, right? Because the money that is encumbered, the deposit in the contract, will only be released if the parameters of the contract are fulfilled, and you have the guarantee that the money will only hit if the parameters of the contract are fulfilled. Yeah? So that's why we have this whole overblown story about, trustless technology. You can trust the code, right? Code is law. Larry Lessig at Harvard, yeah? This is the big guru. Everybody's saying, okay. It's all kinds of problems with that, of course. Yeah? So here's the problem. We have organized society on reputation intermediaries. Commerce is based on reputation intermediaries. That's the very function of banking, other than, of course, to facilitate funding. Yeah? You use the reputation of intermediaries to engage in commerce. The technology does it, but it does it in an anonymous way. You don't know who the counterparty is. People don't, if you believe that you can build decentralized commerce on that, what is decentralized commerce? People engaging with each other in decentralized systems and exchanging value without knowing identities and reputation systems. There is no centralized intermediary, right? It cannot happen. The entire crypto community believes that it will happen just because of the code, because of the technology. Now there are gradations of course, yeah, in between those. Our opinion is that it can't work. It will not work. Code has bugs, intended outcomes aren't guaranteed. You need to fix that problem. That's what this is about. You need to find a way to enable decentralized commerce. And by the way, I just want to give a perspective on decentralized commerce. Decentralized commerce will get us as society arguably to the next level. Why? We can overcome parts of the human condition in decentralized commerce. It's anonymous systems. There is no biases. There is no race. There is no discrimination. It's just code. So anything that holds us back because we can't trust each other, that arguably doesn't exist. The problem is people argue it doesn't exist because of code. That's not true. That's the problem. The whole community believes it's the code. No, it's not. The code is just the foundation for this. There's another layer that you need. Without that, it cannot become a reality. And that is reputation verification in decentralized systems. Now, that's a whole other ballgame of things to talk about. What is that? What does it mean? What are we talking about? Way too much. I think I'm running out of time.
Yeah.
So,
we'll cut over because I want to make sure we have some time to chat a little bit and ask some questions, get some people from the audience. One quick thing, and I don't want you to dive into this too much, but one of the choke points you were mentioning, obviously Facebook, Google, they have like this with ISPs, especially network or net neutrality, all these aspects of that. Do you feel like there will be emerging technology coming out, like mesh networking, as an example, that will take the power away from the ISP and distribute the infrastructure so that a decentralized web can truly be decentralized?
So the question I think goes to how do you really take the power away from the Facebooks and the Googles? So the MIT folks, they're saying, well, it will come automatically once we build new infrastructure, new protocols, where people see that these protocols are more secure, that information is better preserved, and so that's one approach people are taking. You still have the problem of educating the public. I mean, how many of you are using browsers that are not Google? Hands. Wow, okay. Well, okay, Bing is the same thing, right? So it's still a question of how do you get the public to actually believe that something is wrong and that they need to protect themselves. It goes to educating the public to understand that their data is worth something that they should protect. So there are startups out right now that will give you a free car ride just in exchange for your data. They'll say, if you tell me your preferences, the wines you like, while on the car ride, I will give you a free car ride because it's worth something. I can now bundle this data and sell it for advertising purposes. You're giving me access, and that's worth something. You should receive something in return. Yeah? Be it a free ride, products, whatever. Yeah? In my opinion, only that's the only way to get there. And to build that, to give people something in return, that's re-educating, right? So at Samata, for instance, right now, we don't want to set up a system that's Keynesian. We don't want to set up a Keynesian system which we're paying people for making valuable contributions, right? We want this to be market-driven. It won't, because you need to educate people. How do you educate people? You educate people by giving them access. That could be remuneration, it could be things, whatever it is, but you need to educate them and give them something in return for allowing us to educate you, right? To me, that's the only way it can happen.
Any other questions? Pete?
In order to realize the decentralized web you're talking about, it seems like you need compute power at the edge, and everything is becoming more and more centralized with cloud providers. How do we address that? We tend to get people to update the firmware around it.
Edge computing, you're preaching to the choir. I have no idea how to do it, but you're exactly right. We have to move resources to the edge, and people are working on it, but there's always this attempt to move back to centralized structures because it's cheaper and quicker, right? It's always the same story. So this will take several years to get to and discussions and motivations and education. and technology evolution. I mean, let's not forget this. This cannot happen unless the right protocols are in place. Samada is only working on the teeny tiny chink in this, right? This is a concerted collaboration around the globe with folks who realize that this has to change, and it can only change if people are contributing on different levels with different protocols to the same outcome. Great question, yeah.
So currently decentralized networks are being used in the financial industry, but what is your view on it carrying over to like the medical industry per se in the United States with all the regulatory issues? Do you feel like that's something that could happen in the near future, or what's standing in the way of that?
There must be over 100 different crypto startups that are trying to accomplish exactly that. Yeah. So the typical thing that I'm seeing is Merkle tree download of medical data and then building smart contracts around it to populate and upgrade the core data set that you have in the Merkle tree on the blockchain. Ultimately, that becomes a political issue because you need to get, and we all know data protections are very intense when it's about personal healthcare data. It comes to, but there's so many other examples where it becomes political, right? How do you get access to the data under the existing HIPAA restrictions, for instance, in this case, right, in healthcare? How do you get the government to support it and to facilitate it in this new technological setup? So we at Samada Labs, our approach is to say, America, forget it. It will never happen in America. We're going to get our heads bloodied by running against the wall. And people are trying this. I mean, I know a lot of friends who are spending all their personal wealth that they made with Ethereum, 2015, they're investing all of that into medical healthcare startups. No way. I would never, I mean, I would feel my investors, I would do a disservice to my investors in running up the hill and trying to get political consensus on this. So for us, it's really developing countries. We have very strong contacts in India, and India has actually an opportunity to do something with this in a way that it would take us 10 years in this country, more. Yeah. So there are other developing countries that are craving this. If you look at, let me just show you this one thing here, just so you get a sense of where this is going. Currency devaluation. Wow. 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 There's a reason why Venezuela set up a cryptocurrency. Okay? Look at this. There's a reason why they set this up. So to us, that's that's one access point where we can actually get those governments that are in trouble. And Venezuela already did it. Yeah? There will be others coming. So the existing infrastructures collapse because of the devaluation, and they're all looking already, they're already experimenting with cryptocurrencies. Just to tell you this up front, a Stanford study, a year old, says over half of the worldwide existing central banks are already experimenting with cryptocurrencies. It's coming, but we're not quite there yet. This helps. We can sell to these countries new cryptocurrencies. We can literally help them set up a system in which we're creating a stable coin for them. Samada is a stable coin, yeah? Where the stable coin can be used by the government. We can literally set them up. It's government sponsored, but it's a cryptocurrency. It's coming. We don't know how and when, but it's coming. So this is all happening at the same time, but the bus has left the station about 5 years ago or so. So to us, I mean, we wouldn't be in this business unless we believed that it's coming.
More difficult to adapt in a system like the United States, obviously, because our centralized systems work very, very well.
Yeah.
And we're just naturally propensed to be listening to authoritarians and such, telling us what to do and how to do things. For these countries, there's just more distrust, essentially. Is that weird?
Yeah. Well, I mean, see, here's the thing. Our infrastructure works really well. We're happy. Things work in this country, overall. Not always, but overall things are working pretty well in centralized systems. Why should we replace it? Well, those folks, not so well. Yeah? Africa, for instance, I have a lot of students who are from Ghana, Nigeria, and they're going back. They're saying, oh my goodness, you gave us all this knowledge about this technology. In my home country, we're using this right now. It's called leapfrogging, right? So they have a lower level of infrastructure, technological infrastructure, and they can use new technology quicker to overcome legacy systems. So we are really high-level legacy systems. We can't get to the next level. I know VCs in San Francisco who will not even touch any crypto startups because they say it's pointless. You're running up against legacy systems. You cannot win. I'm not going to waste my money with you. I'm going to invest in Nigeria and other countries because that's where this technology can take off. Right? So it's this whole leapfrogging debate. At the same time, we're still driving this. One last data point. Over 45% of the worldwide existing crypto startups are based in what country? This country. 45%. Yet our regulatory environment is probably the most hostile there is. Or let's just say the least providing guidance. Yeah? Not hostile necessarily. So where's it going? Well, it's going. That's the good news. Yeah.
Awesome. That's all we have time for right now.
Thank you, everybody. Appreciate
Thanks,
it.
Wolf. Cool, we'll take a quick 5 minute and then we'll start up with our next presenter.